Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
Hello, everyone. Welcome to another episode in our CEO series here on Learn, Grow, Invest. Today, I have the pleasure of speaking with an old guest, someone who has joined us for quite a few episodes here on this channel. His name is Kadeen, Mairs, CEO of Dequity Capital, who has just released the prospectus for their initial public offer. So they're coming to the market to raise some capital. So of course, we reached out to Kadeen to see if we can organize this interview. So he's here joining us to talk about Dequity, talk about the offer, and just to give you some insights about it. So join me in welcoming Kadeen Mairs.
Hi, Jeremy. How are you?
I'm good. It's been a while, so good to see you again.
Hopefully, you'll see me a lot more often.
Well, I'm hoping to. We used to do those earnings calls together, and we haven't seen you in a couple of years. But I knew it wouldn't be long until we would have had you on the program again. So welcome back.
Thanks, and thanks for having me. Thanks to everyone that's on the call. And Jeremy, before I even start, we have to acknowledge the fact that probably 1/3 of the country is going through a rough time right now, and I just want to, I want us to just dedicate a moment to those affected by the Hurricane Melissa. As you know, Jeremy, and I'm from Westmorland. Pretty much everybody in my family lives down there. Went to high school at Manning's. It's totally demolished. So I just want to take a moment to let them know that our thoughts and prayers are with them.
Thanks for that reminder. We are in Kingston, Rennie and I. We were spared pretty much. So I've heard that it's different when you see it in person. I have not been able to bring myself. We've offered support through various means from Kingston, but never have been able to take the trip on site. I'm trying to brace myself, of course, because I figure that once soon we'll be doing that. But I saw a video that you posted. I actually pulled it. So let's actually jump right into that video, because we had pulled it down because we were going to do the interview.
When Hurricane Melissa hit, it didn't just damage homes, it shattered the hearts of our communities. In Westmorland, more than half of our families live in board houses, and in one night, thousands lost their roofs, their walls, and their sense of security. But in Westmorland, people are not defined by what we lost. We're defined by how we rise. I know that strength personally. I grew up in a board house too, the kind that creak heavy in the wind and leak when the rain fell. But through resilience, determination, and strength of our community, I was able to rise above those circumstances. Today, I stand not just as someone who made it out, but as someone who comes back, to give back, because I know what it feels like to start over. I've seen neighbors share the little they have, youth clearing roads before dawn, and families rebuilding with bare hands and full hearts.
Someone I grew up in
That's the spirit of Westmorland. Now it's time for all of us, Jamaicans at home and abroad, to come together. Every donation, every sheet of zinc, every nail helps one more family rebuild. This isn't charity, it's unity, it's pride. We're building back Westmorland, and we're building it back strong.
Go on. One Jamaica say, man, I go up a lie.
Right now, everything gone for me now. I'm shopping up. I worst results I've ever seen at Westmorland. House, everything gone. Everything.
I've never rocking you, man. Share, you know. Love and share. We can't do greedy, you know. We have to just share one another. But I love. That's what these are.
You know, what stood out to me there is the children playing. Like, I'm like, it's that was in spite of the whole theme of the video, that definitely yeah.
You know, Jermaine, if you use ChatGPT, and I hope it gives you the same result, and you type in one word to describe Jamaicans, the response would be resilience or resilient. So, I mean, if it's one thing Jamaicans are going to do is persevere, and we'll pull through, and I'm sure that we'll come back stronger. It's a very sad situation, but with the help of everybody, I'm sure we'll bring things back.
Yeah, man, I've been absolutely blessed by the wave of donations and support, and you know, we need all of it. We need all of it.
Yeah, so, and at the same time, I mean, a lot of people ask, Kadeen, why, with everything that's happening, why are you going to do this IPO now? Is it a good time in the market? And they ask me these questions, and my answer is, you know, I don't know when if anyone knew a good time and a bad time in the market, then that person would be like the oracle. We could just go to them and they'll tell us when to buy, when to sell, you know. But one thing, you know, the saying about investments or investing, yesterday was the best time to make an investment, and today is the second best time. Yeah. You know, so I mean, the truth is, I mean, as the Prime Minister said, we have to go back to work, because in order to help others, we have to help ourselves. We have to keep the ball moving so that we can drive some productivity, so that we can fast track the assistance while for the persons who are affected at the same time. So,
yeah, agreed. And what we say to our community is that, you know, don't stop investing, right? Yeah. There are persons from our community who shared, you know, that they were able to use their dividends to help out with their family members, their friends, in terms of relief. So you need to keep investing to have the capital to be able to help and support those in need. So it's not that we're ignoring what's happening, but it is our way of ensuring that we have the resources to give back. So yeah, man.
I don't know if you remember, Jermaine, but when I did Dollar IPO, it was the first IPO after COVID. Well, it was during COVID. There was still a lot of restrictions, and it was the same sentiment. Is it a good time? I don't know if you remember, that was probably 2022. We were still wearing masks. I had to social distance and all of that. But what I've learned personally about events like these, where there's a pandemic, natural disaster, is that there's a sharp dip, and it's normally a V effect. After that sharp dip, there's also a sharp spike when things pick up. So, I mean, there are opportunities there as well. There are opportunities for companies to still grow and still thrive.
Yeah, for sure. All right, so let's, you know, jump right into the episode officially. So Kadeen, for those who never heard about you before, never heard about Dequity, introduce yourself to us, introduce Dequity.
Sure, no problem. So basically I started Dequity in 2019, and I'm not gonna sit here and act as if, you know, this was always the plan. You know, I listened to Warren Buffett a lot, and when he bought that textile company, Berkshire Hathaway, it was a textile company. He had no plans of it becoming that investment holding private equity type company that it is today. And it's kind of similar with Dequity. When I started Dequity, it was mainly a holding company for myself, domiciled in St. Lucia, that held my personal investments. The first investment that Dequity had was M24 Investments. M24 was a Cambia remittance and loans business I started when I was 24 years old. Out of that loan portfolio, Dollar was born. So Dequity's portfolio started with M24 and then Dollar and grew into what you see 5 years later as 9 portfolio companies. So that's kind of like the short story in terms of Dequity itself. And as you know, I previously I was the CEO of Dollar, and managed to grow that business and made the decision that the company was mature enough. We put the succession plans in place. Kenra is now the CEO, doing a great job. And I decided to step over to Dequity and take the reins here, as I thought that my passion now was geared more towards, investing and helping other entrepreneurs realize the same ambition that I had of growing and listing a company on the stock exchange. So in essence, that's what Dequity is. We invest in entrepreneurs, not just companies. And when we invest in these companies and these entrepreneurs, we drive the growth of the business. And if the vision is aligned, we help them to grow the business and list it on the stock exchange as well. And that's where we continue to prosper.
All right, great. Thanks for that. So what goes into, I know you give us the short version there. I'll just remind you that you don't have to do that here. You can give us the long story if you want. Yes, you have time. But just in case persons don't really understand how the concept of a company that focuses on private equity, how that works. So, help us to understand that model, right? Because your company is not the typical company that we may see that list, meaning you don't have products or services. You have a portfolio of companies. And so help persons to understand how the private equity model works.
Sure. And I mean, that's always been something that's been highlighted, the fact that, I mean, I don't think if there's probably 1 or 2 private equity companies on the stock exchange, and there might not be as active. I think we're a portfolio company with the most Jamaican companies in private equity company with the most portfolio companies, Jamaican portfolio companies. So to break it down, it's very simple. I would use an analogy of somebody who does real estate. So what we do is very similar to someone who goes around and looks for fixer-uppers, houses in good location, but they need to be renovated, refurbished, and put back on the market. And that's where you can make some gains or some returns. So in essence, that's kind of what we do with businesses. We look for companies that the first thing we look for is the owner or operator of these companies. We look at the character, we look at the drive, the passion that these entrepreneurs have, the ambitions that they have. Are they willing to persevere? They're willing to drive through. And then we look at the businesses that they run. Is it scalable? Are these scalable businesses? Are these businesses able to withstand, shocks similar to like what's happening now? So once we identify these businesses, what we do is we go in, have a conversation with the entrepreneur, whether they reached out first or we reached out to them. We would have a conversation with them, and sometimes we propose not having a majority stake, but buying a minority stake. This is between 20% to 40% stake is normally what we go for. Once we're able to acquire that stake, we make an investment, typically around $50 million for, say, 30%. So I'll give you a hypothetical example. So if there's a business, for example, like a ECS, that's one of our portfolio companies that's dominating the print and outdoor advertising in that space. We go in, we have a conversation with the CEO. The CEO is looking for a partner to drive the growth of the business. We come in, we help them with their governance from board to management. We bring our back office, which is for example, our accounting team, our legal team. So we come in and we focus on fixing the business while they can work on growing the bottom line of the business. After that is done, typically bringing it back to the house example, this is where we're fixing up the house. And then when we put the house on the market is where we would list the company on the stock exchange. And that is where we would get, we would see the greatest return, typically at a 10x return on the original investment. So the business model is what we call a 1 to 2, 2 to 4. And I'll explain what that means. Every year, we try to list 1 to 2 of our portfolio companies. And then we try to acquire 2 to 4 new companies. What happens is when we make an investment, for example, of 50 million in a company, and we go in and we drive the growth of this business with the entrepreneur, the valuation of that company increases, the earnings increases, the controls are better, the transparency is better. We try to get 10x return on that $50 million. So we try to grow our stake to around 500 million. And the best way to get that value is through an IPO. After we list a portfolio company, we don't, like someone who fixes a house, sell the house. I wouldn't say that we sell the business. What we do is we probably sell a small portion of the shares to recover the initial investment and then some. And then what we do is we hold for the long term because we expect that these companies will be able to continue to grow and to pay us dividends. So that is the basic private equity model. So I would use the analogy of a home every time, someone who fixes up houses and resells them on the market. That's basically what we do with businesses here at Dequity.
So the idea is, and I wanted to kind of frame this for the investors watching, right? Mm-hmm. So you will make money as a company. So you do the groundwork, work with the company, work with the CEO, change the business model or tweak it rather to optimize it, help them with the back end, that kind of thing, and bring that on an accelerated path to growth when they're at a point where they're large enough. Because of course, if a company has to be of a certain size and value to list. Correct. So that public shareholders can get a piece of the pie, as well as those who are the founders of the company. When it gets to that point now, you're at that point, the company is generating enough cash. They have enough of a business model that is proven and growing, that it can then now return value to you and other shareholders through dividends.
Correct.
Right?
Correct.
So that means that, what does that mean in terms of what persons can expect from a private equity company? Meaning, so you mentioned that plan of listing a company each year and acquiring additional companies. It means then that you're going to be in this kind of cycle or state of having to deploy cash to acquire or take ownership in those companies. And then on the other side, you may have no cash coming in through the shares that are being sold at listing to be able to provide capital to then invest in more companies, that kind of thing.
Correct. So the main, if you look at our financials, the main sources of income would be gains on, whether it's unrealized gains or realized gains. This is normally a bigger chunk of our income. And then below that, we'll have our dividend income. This is where we get dividend from our portfolio companies. For example, Dollar pays us a large dividend every year once they're performing. And we have our wholly owned subsidiary, M24 Investments, which we will keep that way because that is our cash business that also pays us dividends. So we have the gains, we have the dividends, and we have interest income. Where does the interest income come from in our businesses? In order to help our portfolio companies grow, we also lend our portfolio companies money. So we lend them to buy equipment, we lend them to do acquisitions. So for example, if you look at Royal Winchester, the hospital group that we have, they would have borrowed some money to acquire Winchester Surgical and Medical, and we would have loaned them about $120 million to help close that transaction. They pay us interest on that until they're able to repay that debt fully. So that's where you see the different, probably the three main streams of income there. Now, point to note is we're listed on the main market. one of the greatest benefits of the junior market is the tax benefit. Now, the good thing for Dequity is that it's domiciled in St. Lucia. It's a St. Lucian International Business Company, IBC. So what the good thing is, cap gains are not taxed, and nor is the dividend income. So you find that we still get the benefits of similar to what we would have gotten on the junior market, but we are on the main market and not limited to the capital that we can raise.
Okay, cool. So that helps because I guess the question will always be for investors, what can they anticipate in terms of what the reports may look like, what the income per year may look like. So you breaking that down helps us to understand where we'll see funds coming in and where you may see funds going out in terms of providing, financing to companies or investing in new companies, that kind of thing. So that would be most of, I guess, your capital expenditure. And any infrastructure or resources that you may need to invest in those companies. And then you'll have gains being realized in terms of the P&L, in terms of fair value, whether it be a valuation of a company or a different valuation of assets, as well as from any funds that may come in from either management fees, dividends, etc.
Right.
Okay.
Yeah.
All right.
So persons might look at it and they're like, what's the how do we make money? You'll find that at different segments of the business, on the income side, you have windfalls. You'll have a transaction, for example, in the near future. Of course, we plan to list one of our portfolio companies. And what you find normally is that there's normally a windfall in terms of cash that comes into the holding company. One, and also a high growth on the balance sheet from the gains on that asset based on the initial investment or the carrying value that we had. Normally, that increases by multiples.
All right, cool. So as Tabar is saying, that sounds like a capital raise is not far after listing. That's what it sounds like to me as well, where you did mention the aim or one of the priorities will be to listing one of the portfolio companies in the short term. Well, I mean, you did say a year, so I'm assuming sometime in 2026, early 2027, would be seeing or hearing talks of that being close to fruition.
So Jermaine, and this leads me to a point that's I've seen questions about this as well, in terms of why are we raising debt? Why are we giving up equity? Why are we inviting the public in our business? Why don't we continue to grow with debt? Why are we using the majority of the proceeds to clear debt? And I'll give some history to the approach and why we took this approach, because it's not very typical. When we decided to take a private equity style approach to Dequity, we knew that it would be a new type of business. It wasn't like all my other companies, for example, Dollar, that people got it right away. We had to, at first, leverage some of our assets. So, for example, we had put up probably $1.5 billion of dollar shares, and we would have borrowed around $600 million. What we did with that money was we grew our portfolio of companies. We bought ECS, we bought a hospital group, we bought MD Link, we were in the insurance business. And what we did over time is we felt as if we needed to prove to the public that we could use debt to acquire companies, to grow these companies and have them ready for the next stage, which is for them to do equity raises on their own. Now that we've proved that point, what we want to do at Dequity is to have a lighter balance sheet on the liability side. So what will happen is our asset base, our financials are reported in US dollars. Our total asset is roughly 25 million US. What will happen is that our liabilities will almost be next to nothing. Probably 4 million of this raise in US dollars will go to clearing that debt. What that does for the P&L side of the business is that $80 million that we've been using year over year to pay interest expense will now be reserved, will now be kept in the business, and this can be used to buy new businesses. It can be used to buy back our own share if we see that the Dequity share is undervalued by itself based on our share buyback policy that's been developed. Also, if we have enough cash and our ambition is to have a lot of cash on our balance sheet, then we'll be able to pay out much of that in dividends to our shareholders. The financials that we have there, you'd notice that it's a standalone. It's not consolidated as in our wholly owned subsidiary, for example, M24, which is our cash business. It's not consolidated in it. So it doesn't really show our full cash flow position because we control the direction of that company and we can direct cash from that company into our holding company if needs be. Are you there, Jermaine?
I'm here. I just paused for a second here. Sorry. Okay. There is something you mentioned that I needed to double click on. You mentioned share buyback. Break that down again. Slow up and explain that one for us again, please.
So basically, we've looked at the most successful companies that are, across the world that do a similar business or the same type of business. Of course, the oracle of this all is Warren Buffett, and one of his methodologies or philosophies when it comes to investing is if he can create more for the present value, if he can, instead of giving a shareholder $1, he can make that dollar into $1.50, so the shareholder has more value. That's the approach that he takes. Now, there is a model that exists where, depending on the policy of the company can, just as we look at the intrinsic value of companies that we buy, which is the fundamental value of companies, we also analyze our own company as a listed company. So if we see that our Dequity shares are on a deal, the company might decide that it would want to buy back those Dequity shares. Typically, in some models, what they do with those shares is those shares are basically terminated or they're not kept in treasury. So what happens over time is that each shareholder who holds on to their shares, their percentage holding in the company typically increases over time. So those are some of the investment strategies that we are looking to deploy.
Okay, interesting. Okay.
It's something I just want to say, Jermaine, we always look at new ways to do things that brings a lot of shareholder value. Just like with L.E.A.R.N, Grow, Invest, we were the first company to do earnings call. I remember when you called me about the earnings call.
Yeah.
This sounds like a great idea. So for persons who know me, I'm very, very big on communication to shareholders. I'm big on my audits. I want Big 4 auditors. I don't care how much it costs. I want to put out my financials quarterly, the first 10 days.
Dollar still has that trend going. The financials are still
those
out
things are. Yeah, those things are I hold close to my heart because it communicates to the shareholders the shareholder confidence as well as transparency. And at the same time, if I can build a company that 90% of my net worth is tied up in, I want to grow that value, not just for myself, but for the shareholders who buy into Dequity. No, not to go off into too much, because they said I have time on the program. So as the thoughts come along,
take your time. Take your time.
What I'm working on also is, when IPOs are done, they are reserved shares for strategic investors. Do you think that if you invest in Dequity, Jermaine, and we're doing an IPO for one of our portfolio companies, do you classify yourself as a strategic investor?
I would think so, because my funds are a part of the reason why that
correct. So something that we're trying to and I guess in due time we'll present to our shareholders is give the opportunity to Dequity shareholders some form of benefit being a strategic investor in Dequity. so that they can access these IPOs in the portfolio
So
companies.
pretty much like the reserve pool could essentially be a portion of that be allocated to existing shareholders, so that you don't have to necessarily worry about if there's demand for shares in the general pool that you may not get the amount of shares you're looking for.
Correct.
Interesting. I certainly would not have seen that before.
So there are a couple things that we'll be doing, Jermaine, it's never been done before. But you know how it is. We have to take time, roll things out, make sure our regulators are happy, make sure there's transparency and fairness for all the investors involved.
All right, cool. Fair enough. All right, so let's choose any portfolio company that's within the group. Hopefully one that maybe is a candidate for listing. I know you probably can't say that definitively at this point, but walk me through one of the companies. What would it look like for that company to go from where it is now to possibly listing, right? What would that path be? What would maybe the revenues need to be? What would be maybe your comfort level with what the business is able to do before we may see that company list?
Okay, sure. So I'll use, for example, we'll use Royal Winchester Hospital Group. That includes Royal Medical in Sub, which is a hospital, and Winchester Surgical and Medical, and that's in Kingston. So I'll walk you through how it started, our initial investment, and how the company grew over time. So we invested in one hospital, Royal Hospital in Sub. That's where my son was born. And the other principal, our owner of the business, is Dr. Nepal. He's OBGYN. So Dr. Nepal had that business with his wife. He had grown it over the last 30 years. We were fortunate to be invited to become shareholders in that business. Since COVID as well, we thought that having a diverse portfolio involved having a healthcare aspect to our portfolio. So we took the opportunity to invest. I think we invested, don't hold me on the exact numbers, roughly $150 million in equity to purchase around 40% of the business. At that time, the assets of the business was probably 300 million, for example. When we went into the business, we restructured, we did what we had to do, and we did a bond raise for that company. What we did with the bond raise was we took that money and made an acquisition of another entity. And what we did as well is we actually loaned some money to the portfolio company, to the hospital, to close that transaction as well. So that company's balance sheet grew from probably 300-400 million to over $1 billion currently. So we grew the assets of the company. On the earnings side, the earnings was probably 40 million per year. And when we acquired the second entity, it would have doubled its earnings. If you ask where does a company need to go, what number a company needs to hit to be really have the earnings or the PE that, you know, the investment banks are looking for, I'd say you have to grow earnings to around 150 million PBT. And that's what we target for most of our companies. So that's 150 million profit before tax. Now, typically, if you go to any of your brokers, the typical valuation is a multiple of your earnings. And typically, you get probably between 10 to 12 to 14 if you're lucky, depending on the industry and how other companies similar to that perform. Now, that would land you at a valuation of probably 2.5 billion, roughly. Now, with a valuation like that, you can bring a company to the market and you can raise up to 500 million, or know that it has lifted up to 750 million if you gave up 20 to 30% of the business. So using our healthcare group as an example, that is how, you know, from start to end, how typically the investments and the partnership work to get a company to the market.
All right, interesting. You're teaching me how it works, right?
Yeah.
Interesting. All right, so talk to us. And actually, see, Philip asked a question here. I was just about to ask you, right? So we touched on it a little bit before. So Philip says, you know, congrats, Kadeen and team. some would opine that it is an insensitive time to be asking the public for funds to invest in your company given the recent disaster. What is your thinking on this? And I know we touched on it before, but you know, a lot of persons have joined since then, and I had it on my questions here, so you know, can just repeat that.
Yeah, I mean, we did touch on it when we just joined the call, and of course, let's talk about it, the time and how sensitive it is. I mean, I personally, as I said on the call, my aunties, my grandmother, my cousins, my high school, my community college, my friends, everybody's from Westmorland, right? I grew up in a board house, as I said. I saw the house I grew up in, you know. So I can tell you personally that it's been a rough time as well. But you know, and I share the sentiment of the Prime Minister. He keeps on saying that, you know, we have to continue to be productive. We have to continue to invest. You know, businesses have to reopen because, I mean, I made a trip or a couple trips to Westmorland, and that's just for a few communities. And I don't have enough to help everyone, but trust me, it costs a lot of money. And I have to come back to Kingston and go to work. It's similar to what they say on the plane, that, you know, when you should put, if you have your child with you, you should put your seatbelt on before assisting anybody else. It seems insensitive, but in order to help others, you know, you have to ensure that you're stable and you're in a good position as well. And as I said, just it's similar to the time with dollar and COVID. That time was, a lot of persons would wonder if it was the right timing. So what I would say is I'm in total agreement with the thoughts, and trust me, I feel it personally for what's happening for my family and for my friends and for everybody else. But I see where this is a good opportunity for persons who are still willing to invest or have the ability to invest in a company who has a portfolio of companies in these areas as well that might be able to, because we have a hospital down there as well, Jermaine. And what you have to realize is the public hospital is down. And through the investment of Dequity, we probably have the only CT scan that's working in the entire Western Jamaica, probably, right? And it's through investments that we're able to, you know, open and give service, or financial service business, M24 investments, in the entire Western side. When the disaster happened, a lot of persons didn't have any cash. People couldn't get money to them. We were able to open our Western Union MoneyGram business remittance side so that persons could get cash and get assistance. So we still have to play our part commercially as well to ensure that, you know, people are still motivated and people can get access. You know, the banks have to reopen, you know, the supermarkets have to reopen, and for those who can help, we will continue to help. So those are my sentiments to that point, and I just want to re-emphasize that it's very close to me. Jermaine, I was born at Noel Holmes Hospital in Hanover. I lived in Hanover for a long time. I lived in Westmorland. I worked at NCB in Junction, St. Elizabeth for years. You understand? I lived in Montego Bay, in Fairfield. These are places where when I drive through, I know people everywhere there. These are my communities. These are my people. So it's very close to my heart as well, Jermaine.
Yeah, man, I can hear it. I can hear it in your voice for sure. The way that I see it, and this is what we say to our community, that now is the time to keep investing, right? I know persons where at times now, if you have to do this, I understand. For example, if you have to clear your investment account to work on your home or do some repairs or help family, etc. But there are persons who need their capital to keep working for them, because we have also discussed that persons, family, friends will need ongoing support. So there's initial support that everybody is chipping in and helping out right now. But 2 months from now, 3 months from now, a year from now, you will still need to be able to possibly support someone who may not be able to go back to school yet, or go back to work yet, or maybe they have an illness and they haven't been able to get treatment. So now you have to chip in. So if you can still invest to be able to provide and offset some of your own expenses, maybe from salary. I think that's a good idea to still be thinking about that and positioning yourself for that, because investing was never optional to begin with, and I think even now it's needed more than ever. So to me, now is the time to double down to invest. It's not something that you step back from now, especially based on what's happening. And I think Philip says he agrees with you that we need money now more than ever, and Jamaica's best way out of this disaster is through more commercial activity, right? Exactly, right? Because as persons who are going down, volunteering, offering support, there has to be somebody on the other side still being productive, still generating income.
Correct.
So that 2 weeks from now we can send money, a month from now we can send money. So it's the way I see it. And the truth is, the markets, I would say in general, the Jamaica Stock Exchange, I believe, needs more activity. We need more offers, more opportunities, more life, right? To be in the markets, and offers are the way to do that, right?
Yeah.
So more opportunities should come, and it should be a case where the market doesn't slow down, because to me, companies are going to need capital now, right? Not everybody will be able to take on and manage debt in that way. So equity to me is a viable option for some companies right now. So I'm hoping a lot of private companies who see this, who may need capital, will come to the market so that they can get the capital that they need, and then investors have an opportunity to be a part of that process, right?
Agreed.
So Trevine agrees as well. Good to see you, Trevine. All right, so talk to me about the use of proceeds, right? So the use of proceeds, talk to us about how much you're raising and how are you going to use those funds, and why this is an important thing for you to do with these funds.
Sure. So I mean, the group chat sentiment of the investors is, companies that are raising equity and using that equity to clear debt, are not favorable. And as I explained before, in our case, what we did was the reverse, where we borrowed debt to prove our business model, and now we are doing a natural thing, which is to clear our debt, and so that we don't have debt obligations to worry about, so that we can focus on the portfolio companies that we have already acquired. So in terms of the raise amount, the total raise amount is approximately $657 million, and I think around, I don't have my safe one, I think around 620 of that is going towards clearing a bond that we had. And the rest of the proceeds, of course, much of it goes to administrative IPO expenses, and whatever is left over goes back into the business. What will happen right after the IPO is that most of the cash that we have coming into the business that would normally go out back to pay interest expense will now be in the business, where it could be given to the shareholders in the form of dividends. So it can be used to acquire new companies, or as I said, what's been contemplated as a share buyback policy. So those are typically, that's typically what the offer is for. And then in the near future, of course, our business model is to bring companies to the market, retrieve back whatever debt that was loaned to that company, and get back our initial investment plus some, and still buy and hold and get dividends from these companies.
Okay, so what you're saying is that, again, I'm translating this for our community members who may sometimes hear it but maybe not process it in a way that thinking about it practically, you would have used debt to be able to grow the portfolio of companies to this point. At some point, you have to repay your debts, right? It's good business, because you'll be in a position to repay the debt. That 80 million estimated that you have to pay on that debt each year now goes back to your P&L in terms of, it adds the profit, right? So you're able to realize that in terms of growth. And then it also means you have more cash now, because you're not paying that out in debt payments each year. So now you have the opportunity to have cash to be able to take position in companies, which adds to the portfolio. You can either help an existing company do something like maybe acquire another company or do some sort of investment. And then you have the opportunity, if you have enough cash and there's nothing else maybe appetizing on the market at the time, you buy back shares to be able to add value to existing shareholders of the company.
Correct.
All right. Cool. So so Philip says repaying debt is an excellent use of proceeds, generally speaking. All right, cool. So
I just want to add to also, Jermaine, what it does is it gives direct value to shareholders in the sense of our balance sheet. Our net asset increases by, there's no money coming out of the business, and you're creating significant value of $600 million a year. Our net assets will increase by $600 million in essence. And typically for companies like private equity companies, persons typically value these companies based on the asset versus liability. So they look at what the net asset is for the company. So if you look at our total asset base, our net assets is probably, in Jamaican dollars, roughly 3.5 billion. Because of the timing and how the market is set up, and because interest rates are high, the shares, the valuation that we're coming to the market at is actually significantly discounted. So in my opinion, it's a deal for investors, because the business, based on the assets that they own, the net assets that they own, the business is discounted around 30%. So you get 30% upside instantly when you're looking at the net assets of the business. And then you can look forward to the future performance of the company as well.
Okay. All right. So I have a couple more questions here. I'm actually going through as you're talking, Kadeen, to ensure that I don't miss any questions here in the chat. So I have 2 more questions I want to ask from my list here, but I don't want to keep the chat waiting, so I'll do that.
Chat is full.
Well, we have 110 persons on right now, right? So Orlando is asking, what about persons that is interested in purchasing shares but have different brokerage houses from the ones that are listed? So who are the selling agents for the offer?
All right. So our main broker is VM Wealth. But naturally, just like if any other IPO, you don't necessarily have to open a brokerage account at the broker, at the main broker or the selling agents. Once you have an account and you have your what do you call it? It's your stock exchange account. You can always purchase JCSD, correct? You can always purchase shares through any of these brokers.
Yeah, and that's how it is now with most IPO platforms. And I know VM has theirs. I think it's called Wealth Edge, if I'm not mistaken.
Yeah.
Yes. So what that means, Rolando, is that you can sign up on that platform. You don't have to open a VM account. If you have another brokerage account, you just sign up, use that same JCSD number from whatever broker you have, and they'll usually show you how to transfer to make the payment. So whether it's a wire transfer, some person may choose to pay by check or whatever. Once you follow those instructions and attach your receipt, you can do your application that way. All right. Candice is asking, what would be the obligatory clause that would guarantee that these companies will pay Dequity dividends in the future? Is there something in place that says the portfolio companies have to pay your dividend? I'm imagining it may be, I guess, due to available cash, but can you explain that to
Okay, so I'll use 2 examples, and I just want to set the tone with dividends, because a lot of persons, even though a company has a dividend policy, and not just talking about my company, not because they have a dividend policy means that the company will pay a dividend. The directors of the board will decide if it is prudent to distribute dividends to the shareholders. So, for example, you have companies that now might not be a good time, and even though they have retained earnings, that company might decide that they're not going to pay any dividends to the shareholders. So, to answer the question directed, is there a guarantee that our portfolio companies will pay dividends to us? The answer is no, The only control we have over dividend payment really and truly is through our wholly owned subsidiary, which is why we've kept one of our financial service businesses, M24, which is in the Cambia remittance business. We've kept that business as a subsidiary so that we have more control over how dividends is distributed, and keep that as the cash flow side of our business.
Okay, all right, got you. Kenton is asking, what's the time frame expected for these companies to 10x?
So Kenton and a lot of people, this is the reality. It's like the loan business. Some loans go bad. You just hope that if you lend 10 people some money, 9 or 8 of them pay you back, and you have a business model that's working, right? It's similar to any other business, even private equity. We might invest in, eventually we're gonna have 30, 40 companies, and we have to select the best one, because all of them are not gonna perform at the level that we want them to perform. So I say all of that to say, in terms of the time frame, our expectation might be different from the reality. So our expectation is that when we initially make an investment in a company, that money that we put in the company can clear debts and streamline all the cash flow issues a company might have. It also takes time to fix their back office. A lot of times their accounting, their HR, their marketing, their all of those stuff have to be fixed. The timeline to fix a company, I say that takes probably 12 to 18 months to get all of that solidified. And then there's a growth phase. And this is the phase now where we start focusing on the earnings, on the bottom line, to get to the valuation to list. Normally, this can take a year, and it can also take an 18-month period as well. Normally, you want to have 1 to 2 solid years of performance to prove that the business model is solid. So in terms of time frame expected to 10x a company, bringing it to market, it can take, from making the initial investment, it can take 2-3 years to get that done. Some companies quicker than some. You might make an investment, the entrepreneur is on track, and it can take us 2 years. But typically 2 years is on the optimistic side. I'd say it'll take about 3 years average to get a company to the stage where you can 10x your initial investment.
And I figure it really depends on the industry, right? So for example, if you were to acquire a lending company, you've already proven that model with Dollar Financial. You already know exactly what's needed. If you acquire a daycare, it's going to be different.
Yeah. You can't grow the kids that's going to come.
Exactly, because you also have to learn the business. You have to learn what works. So, I mean, I figure, I was going to say that would really depend on the company. So what I would do is I'd probably measure that from the point that you have things now optimized. Because if it takes you 18 months to optimize it, maybe the revenues aren't anywhere meaningful near that 150 million that you mentioned that you're looking for in terms of earnings. So if they start out at the 30 or 40 million, it may take another 2 to 3 years to get to that 150. So I think that's the part that I'd be thinking. So what I would be looking for, and I'll say this to you, Kadeen, I'd be looking for because I'm assuming since you're sharing it in the prospectus that maybe when you report on these companies each quarter, we're getting at least either quarterly numbers or some sort of numbers to help us know where the companies are tracking. When I start seeing that company start maybe reversing losses or growing in profitability, then I'm making the assumption that behind the scenes, things are now being optimized, processes are in place, and now it's positioned to grow, because I guess all of the companies may not be clicking on all cylinders at the same time. Maybe some are doing well, depending on what's happening overall. So like the Royal Medical know that it's probably one of the only medical places standing in Westmorland, may do very well for the next 12 months until there are other options for persons to choose. So they may have a great 2026, but another company that maybe is in an area that maybe persons aren't as spending their money or resources there. It may not have its best year, but then maybe the other year. So I figure they may have like different cycles that they go through.
That's the beauty, Jermaine, about investing in a private equity company or a holding company who has a diverse portfolio. It almost creates a correcting effect. Like when one business goes up, if one is down, one might be thriving a lot more. And what that does, it diversifies your portfolio and kind of reduces, I would say, kind of your risk exposure becomes more evened out.
Yeah. All right, next question here. How does the current economic climate for Jamaica and the projected downturn in productivity affects your outlook in with respect to your portfolio companies? Similar to what I was saying just now, which companies, for example, do you think are going to have a good year versus maybe a not so optimal year based on what's happening now?
All right, so let's take ECS for example. So this company focuses on print, advertising, outdoor media, and stuff like that. The fact is that everybody's sign for their business is blown down, and these guys install mega signs, you name it, right? For the next 6 months, a business owner is not going to be focused on, their outdoor advertising or their signage, for example. So for the next 6 months, you'll find that it might be a downtime for that business. But thereafter, what you'll find is that you'll have so much business in need that even if you have competition, there'll be a spike. In terms of Jamaica's current downturn because of the unfortunate hurricane, if all goes as we project, just as I said on the beginning of the call, just like with COVID, it normally takes a sharp downturn and then it takes a sharp upturn, and then it kind of balances out. So it will affect some of our portfolio companies, but some in this time will do a lot better. So it will actually balance out in terms of our financial performance, because some will do a lot better than it normally does, while some might fall off a lot more than how they'll normally perform in the normal course of business.
I guess it's like having a stock portfolio, right? If you have 9 stocks, you may have 2 or 3 that do really well, 2 that maybe not so hot, 3 that are probably break even. So it's gonna be similar in that way.
So Jermaine, I like that question that Enigma asks as well, because here's the thing. That's why it's important as the holding company. Think of the holding company as the father for the companies. We can't be carrying any big debt because we need to be able to help the portfolio companies in the time of need. If we carry strong cash balances on our balance sheet at Dequity, we don't have a high debt to equity ratio. We have very little debt. That puts us in a very strong position. When there is a bad time for a portfolio company, we can step in and we can give that company a bridge or seat through for the period that they're down as well. So we're kind of positioning this company as one that is strong, one that creates value, one that is for investor who thinks long-term. This isn't a stock that I'd say you're here today flipping stocks and doing all of that stuff. So that's a good question, Enigma.
Okay. All right. I think Kenra is saying dollar loans are available to buy shares. So we just had the dollar earnings call yesterday. So yeah, man, happy to see the dollar team in the chat for sure.
Yeah, the crew is here.
So Candice, yes, we answered this question earlier. So VM has their IPO platform where you can apply from any broker. I'm not sure if Moneyline will come on stream. I think you have like a loyal cohort of JMB Moneyline users who would prefer to apply through Moneyline, but I've used VM Wealth Edge IPO before. It's easy to use, right? All of the IPO platforms I find are fairly easy to use. Brian is asking, I've been listening, and my question is, how can we tap into investing from the UK or through eToro or Trading 212? I don't think you can use either of those platforms. Brian, you'd need to have a Jamaican brokerage account. If you have a Jamaican brokerage account, I think you'll need a TRN for. Once you can apply from overseas, I think you can apply for a TRN from overseas if you don't have one. Once you have the TRN, then open a brokerage account. Once you have the brokerage account, then you can invest, right? This would be a perfect question for somebody from VM. I think VM will have likely an investor briefing with you.
Yes, we're gonna have an investor briefing with.
So I would just stay tuned for that. For those who have questions for the broker,
Correct.
then you can ask those questions at that point. All right. So let me think. I have one question that I missed. Andre is asking, let me know if you're willing to tap into any businesses in the US. So Andre is looking for some investment.
All right,
is
Andre.
Dequity looking on any investments in the US at this time?
No, I mean, look, I put it this way, Jeremy, we're focusing on building back Jamaica right now. So if we want to make any investments, it's gonna be in, St. Elizabeth or Westmorland. I think the capital that we have for allocation now will go back to rebuilding Jamaica.
All right, got you. All right, so let me get back to the rest of my questions. No, just a couple more. So I want to break this down into like segments, right? So what would be your short terms? All right, so let's make an assumption that you're able to raise the funds, IPO closes successfully, you list. What are you focusing on for the next 12 months after that, and what's the medium-term outlook? So what are your priorities as CEO for the next 12 months, and what would be what are you looking forward to in terms of milestones maybe in the medium term?
Okay, so of course we would have companies that we would have been doing due diligence on to determine if we would make investments in these companies. This is an ongoing thing. We'll always be looking for opportunities. If these companies fall within our investment philosophy and stuff, we will make investments in other companies that's doing acquisitions. The next focus, which is probably the most important focus for me right now, is our portfolio companies. The ones that I would say are at the point now where their next step is not to raise more debt, but probably to go to the market for equity so that they can continue to grow and grow efficiently. So those are my two main focuses after listing. Focusing on the company or companies that we plan to list in the very near future, and also continue to look for opportunities and companies that we're doing due diligences on currently.
All right. So how does it typically work for you in terms of trying to how aggressively do you pursue companies to acquire, right? And I remember us having this conversation at our conference back in 2023, right? But is it that person's just, for example, they DM you on Instagram, say, hey, Kadeen, I have a company doing X amount, I'd like some investment, let's set up a meeting. Is it that simple? Is it that you have like a way to generate leads, for lack of a better term, for companies to look at? How does that side of the business work?
That's actually a very common question. And what we don't have here in the States, it probably, you'll have a lot more companies who will bring leads to you and bring opportunities to you. And sometimes they're good opportunities, but they're not reaching us. So actually, one of the things that we're working on is a platform that will allow persons to, people can go there to, exchange, grow their businesses, buy, sell businesses, put up due diligence information, so that their investors can find businesses to invest in, including Dequity, and businesses can find investors and investors can find businesses. Right now, how it works is we we basically, with our internal team, will look for opportunities based on industries that we might be interested in now, and we'll reach out to these entrepreneurs or business owners. That's how it works now. Or there are referrals. So typically we'll be looking at, for the year, we're probably looking at anywhere from probably 2 deals, 3 deals per month. So that's probably at 24 to 36 businesses. And as I said, most times we probably just invest in 2 or 4 of those best companies, or companies that fit within our ecosystem. So sometimes, Jermaine, as well, we might make an acquisition and we might hold a company, and it might not necessarily, it might be more strategic than direct, because we might acquire a company because we think that it will be a good fit for one of our current portfolio companies, but that portfolio company might not be ready, or might not be in the position to do it yet. So these are some of the strategies that private equity companies deploy and that we deploy as well.
Okay. That platform certainly sounds interesting. I watch a lot of shows, like Shark Tank. I listen to, channels that talk about private equity a lot on YouTube. And I've always wondered the same thing, right?
Why we don't have one, right?
How we don't have this kind of, because I know I can tell you, for example, Learn, Grow, Invest. We've had this, conversation in the past that, for example, at one stage we're not doing that right now, but in the past I was, aggressively looking for capital, for example, for a company, because we wanted to maybe grow a certain way. We thought there were certain, opportunities we wanted to take advantage of, but there's no sign that says go here for capital. So I know that there'll be more visibility there now that you're planning to be public, because as a public company, more persons will be aware of what you do. So hopefully that brings more deals to you. But in general, it may not be as straightforward for persons to know that's what you do.
Yeah.
Philip is asking, can you give some color on the litigation mentioned in the prospectus, considering that it's regarding per split holding? It seems significant.
Okay. No, I mean, it was, I think it was clearly explained. It's not, it was explained in the prospectus, but I just want to make a clear distinction. Typically, you have a holding company and you have a management company. The management company is where all the employees are at, and that is called Dequity Capital Fund Managers. That's not a subsidiary of the Dequity that is being listed, but that's where most of the liabilities and risk involved on the management side. So what's happening there with that litigation, just for disclosure purposes, even though it's not a subsidiary, it was including to let people know that there were some litigation, or is a litigation going on with a former employee. And this happens, I guess, a lot of times within organizations.
Okay, so you're saying that it's nothing to be concerned about?
I mean, it was disclosed, so we want to we're big on transparency, so we want to let shareholders know that, okay, even for the namesake, the management company, where employees, and this can happen again, where, there are instances where there are disagreements between the management and employees, or employees, and that goes to litigation or to IDT and stuff like that. It's important to still put that in the prospectus.
If I did not own a company with employees, I would not know that name that you just mentioned. It's a thing, right? It's a thing for sure. I've also had, I was laid off once. I had a dispute. I had to engage a lawyer for the it's a thing. Like when you manage people,
things get settled in mediation. When there's a good mediator and the two parties see eye to eye. But this is HR stuff. It happens. You have customer problems and you also have internal problems. So it's a part of the business.
Yeah. And this looks like I don't know if this is a question. Enigma is saying, pro tip, don't miss out on the shares you need by opening multiple JCSD accounts across different brokers. I don't know if I want to read this out loud, Enigma. I don't want JSC to
Can read the last part. They said full confidence in Dequity.
Okay. I'll read that part. Enigma has full confidence in Dequity. All right. Kimani's asking, why was the ask so low? Only enough to service the debt and a meager 1.5 million to working capital. Why not higher working capital ask? What's the highest percentage of shares are you comfortable with giving to the public? Kimani's asking why didn't make more shares available.
I'm going to have to hire Kimani because trust me, if I could raise a lot more capital without giving up more than 25%, I would have done that as well. But there's a give and take in the process, Jermaine. When we had the discussions with our brokers based on the market and where interest rates are and, you know, the returns that people are getting on bonds now, that reduces valuations. So you have the debt market, equity market. When the debt market is doing good, then valuations drop and the equity markets are low. That's the market that we're in now. So what that causes for Dequity when we're planning to go to the market is that we got a significant discount to make the offer attractive and to give the investors value upfront. And what that does is, based on the reduction in the valuation, to give the investors the opportunity, that 25% that we're willing to give up is a lot less. So that's how comes we ended up at that figure. That's how it works.
Okay, I get what you're saying. And also, I guess it would also mean, I guess, the state of things as well. For example, if maybe the individual valuation for each portfolio company was maybe higher, overall value of the company would be higher.
Correct.
Okay, I get what you're saying.
Correct. Mm-hmm.
Enigma is asking, is there an option to upsize the offer? I don't believe I saw that.
No, I think it's where it's
there's no upsize.
No. We can do that, Jermaine.
I'm not the best person to ask, honestly. I think, I've seen that. I was gonna say I've seen that. Maybe, you know, if Simon is still here, Simon knows that side better than I do. Simon, if you're still here, maybe you can answer that question. I don't know, right? So I'm still trying to learn more about how that side of things work. I think you answered all of my questions. My final one here was, what would you say to an investor considering this IPO? So everything that we've asked, everything that you've probably heard or seen, what would you say to somebody who is on this stream right now wanting to make a decision, considering everything, right? What would you say to them if they're considering this IPO?
I mean, the natural thing is, all right, so I'll talk about myself when I'm investing. Or one of our taglines at Dequity, where we invest in entrepreneurs, not just companies. I'd say when making investments, it's very important to look at the owner or operator of that business, you know, their track record. Have they always done what they've said that they're doing? Do they communicate well with do they communicate well with their shareholders, whether things are good or bad? You know, are their ambitions aligned with reality, you know, character, stuff like that? I would say that's how I look at my investments a lot of time. And also I invest in businesses that I understand. So I hope I was able to explain exactly what Dequity does today. If this business is something that aligns, if you understand the business, if you trust the owner operator and believe in the future of the business, I'd say to make the investment and buy the Dequity shares. Those are kind of like my guiding principles. Everybody has their different principles that they use when they're about to make investments, but I would leave that with persons on this call to make the decision on IPO date to buy Dequity shares.
All right, and this, I completely forgot to say this at the start. I have to say, of course, speak to your licensed financial advisor. Here at L.E.A.R.N Grow Invest, we provide content to help you make investment decisions, but we, of course, don't substitute for you speaking with your licensed financial advisor. I'm not a financial advisor yet. I'm actually hoping to become an independent financial advisor sometime in the near future. That day is not yet, so I cannot make
What
a
I would say,
prediction. Mhm.
what I would add is, and we just made a video, a 30-second video when we dropped the prospectus where we said the same thing. I said, look, how long is the call? An hour? I mean, we made a 30-second ad, and on the ad I said, look, I don't make investment decisions in 30 seconds. So what you have to do is read through the prospectus, understand the business, look at the financials, and you can make an informed decision thereafter. But if you believe in the brand, believe in the person operating it, similar to Tesla, people just believe in Elon,
Yeah. And I mean, so that what we do as well, we do episodes like the CEO series. Again, I think you were maybe one of our first interviews. We pretty much provide you with access to the information. So things like our prospectus review, which you are going to be doing inside our L.E.A.R.N Grow Invest community. So if you're interested in being a part of that prospectus review, join us in the community. And we'll be going through it tomorrow night. Right. So if you're interested in doing that prospectus review, I'm assuming Kadeen will be doing more interviews, and I know there'll be an investor briefing as well. So give yourself the time to get as much information as you can, have as much questions as you have answered. The questions will come after you read the prospectus, right? Because if you haven't read the prospectus, you don't know what you don't know. You don't know what to ask. So you may not have any questions now, but after you read the prospectus, you have 3 or 4 questions. Then you can, of course, ask Kadeen. If we have enough questions as a community coming to us that are still unclear, then we'll ask Kadeen to come back, and I'm sure he'll be more than happy to come back and answer just a Q&A call. So yeah, now is the time if you have any questions to post. All my questions are done, so I may just do a quick run through to see if there are any questions on Instagram or in the chat. Michael is asking, can you clarify your investment stage focus? Are we talking seed or pre-stage startups, or are you targeting later stage companies that are pre-Series A but already revenue generating with proven? What does UE mean? I don't remember. So that's what Michael is asking.
Yeah, I guess Michael, in short,
I think I'm just connecting with Michael. Sorry.
No, I was just saying, regards to this question, the Jamaican market is not as sophisticated as yet when it comes to private equity and different stages of business. What we call a small business on a global or a medium business on a global scale is actually like a small or a very small business. What we look for is, I would say, not startup, but invest on companies mostly that have been around for at least 2 to 3 years. And as I said, we look at their current earnings and their ability to scale and the entrepreneurs that are running this business. We're not a venture capital business. Probably in the future, we'll launch a venture capital arm, and then we'll probably have a team that focuses on smaller companies that are bringing ideas to the market, or companies that are true startups. So our investment stage, in essence, is not mature companies, but growth companies, or companies that are in the growth phase, are starting to enter the growth phase. So I hope that answers the question.
Okay, I got you. Johnny is asking, what steps are you taking to turn unrealized valuation gains into consistent cash flows? And what timeline should shareholders expect for the portfolio companies to generate stable cash-based earnings? This actually reminds me of one of the questions. So for example, if there are some companies, for example, that may not be turning a profit or may not be doing as well, I guess this is in line with what Johnny is asking. So
yeah, so if I can answer that, Johnny, I mean, if you look at, I'll talk about Berkshire again. They held Bank of America shares for a long while, and then they decided that they wanted to liquidate a portion. Our listed shares, obviously, is Dollar Financial. We don't have any immediate intentions of liquidating or turning those unrealized gains to realized gains. Most times when companies do things like this, they see opportunities that would give them a greater return. So until that date, we're not looking on that. We're looking at continuing to turn our interest income, our dividend income, and companies that we list, the returns that we get from that. We're looking to continue to use those returns to do future investments and in the future as well give some of that earnings back to the shareholders. In terms of timeline, shareholders should expect the portfolio. Some portfolio companies are generating stable cash-based earnings. Some of our financial services, some of our health, and then you're going to have some that need some assistance to get to that stage. But as I mentioned earlier in the call, Johnny, not sure if you were here, just in terms of the timeline it takes to streamline a company after acquisition, it's normally a year to 18 months just to focus on the back office. Most times their accounting is, they need a lot of help there. HR, policy, procedures, corporate governance, putting their board in place, their audit committee, things like that. Takes a little time. And then we can focus on, stable cash flow and earnings over the next, say, 24 to 36 months. But those are kind of like the timelines that we work with.
Okay. And Johnny says, off topic, are there any internships for first-year UTech students? I guess Johnny's a first-year UTech student.
Yeah, I mean, look, I'm always here to take anybody's willing to work for free. I will.
I was gonna say I actually need an intern too.
There's something at the office to do, so
yeah.
I mean, shoot your shot. You never know,
We actually need an intern too. But Johnny, I will say, Kadeen is one of those persons who will respond to DMs. So if you DM him on Instagram, pose your question, share your resume, that kind of thing, I'm sure he'll give you a response there. And Kimani says, can hire him anytime. Ask Kevin, CFO, for the resume. So have some credit there. Okay, so Michael was saying that the UE is unit economics. I think we'd have answered that question already. So if there are no other questions, let me check the groups as well. I know sometimes persons drop questions there. But as I said, if we missed your question or I didn't get to ask your question, we'll kind of collate all of the questions that we get over the next week or so. We'll see what is answered for the investor briefing. We'll see what is answered. Maybe if there's like a taking stock interview, etc., then we'll kind of say, okay, do we have enough questions to justify another session with Kadeen? And then we just take it from there. But again, just post your questions either under the video, send it to me directly. I'll kind of group all of them, and maybe we even host a session just to answer those. All right. So thank you so much, Kadeen. Any final words to everyone here?
No, I mean, thanks everyone for joining us on the call. I hope to have a successful IPO and continue to add some value, create some shareholder value for everyone, and of course continue to drive and invest in companies that will continue to grow Jamaica and build Jamaica. And again, my heart is out to persons affected by Melissa, and I want to say to Jamaicans to continue to stay resilient, and we shall rise again.
All right, agreed. And on that note, actually, I earmarked this one for later, but Aquatics is asking, how can we donate? They're all the way on the other side of the island, but would really love to help. Kadeen, I don't know if you're doing any specific fundraising on your side for this. I know what we do on our side is direct persons to do it through our church. We are planning to take donations through our conference that we're having next weekend. But for now, we direct persons either to the Support Jamaica website or to our church, who is a registered charity. So if you're a business, for example, you can have that as being registered to donate to a charity. But Kadeen, I don't know if you have anything.
I mean, if you have items to donate, we do have trips going down almost every other day. You can drop things off by Kaya if you're in Kingston, care of Raddy. And you can also drop things off by AP Beauty and that's by Arden Road. And that team will put all the stuff together, and normally we take a trip down and we distribute. So if you have things to donate, those are 2 drop-off spots that you can drop things off at.
Okay, that just gave me an idea, Kadeen. I'll ask you to send me those details that you just mentioned. We'll put it under the video, and then I'll probably just ask you to do maybe a quick, short form video on that, and we'll probably post it for you and to kind of get, persons to participate in that. All right. All right, I think a question is kind of sneaking in here. Oh no, it's just a comment here. It's just a comment here. Speaking to the performance of dollar and stuff like that. All right, Kadeen, thanks again. It's been a pleasure. Thank you for taking the time on a Friday night to share everything that you have with us. All the best in terms of the offer that is currently out. And I know we'll be speaking again soon.
Sure. Thanks, Jermaine. And thanks, guys. Thanks for having me.
All right, everyone. What I will do, just for completeness here, I'll just kind of go through very quickly the prospectus, just for those persons who may not be familiar with the offer. I'm not going to stay long on this because I don't want to make this video any longer than it's already 90 minutes. So let me just share my screen, just summarize the offer for those who may not be aware of it, so that we can kind of help to fill that gap for some persons. So I had the prospectus here. Please read the prospectus. It's very important. So I'm just going to the summary page. I did a video just this week on how to read a prospectus. Hopefully you'd have watched that video. So check out that video if you haven't, if you're unfamiliar with how to read a prospectus, just check that out. All right, so let's go through the details of the offer. So it has here, the shares are at an invitation price of $1. There are 657 million shares available, inclusive of 263 million reserve shares. The use of proceeds will be used to pay the invitation and listing expenses, to settle the debt, and remainder, if any, will go to working capital. The estimated working capital is about 1.5 million. And then, of course, you have, I want to check things like the opening date, close date, that kind of thing. So usually we cover all of this in our prospectus review. So you want to go through this, right? Go through the portfolio companies, go through the MD&A, learn everything that you can about the company before you make an investment decision. Usually there's going to be a round of different interviews, etc., that you can check out. Check those things out to understand what you're investing in, so that you know whether or not you're making the best decision for your portfolio. All right, so that's what I would say. Again, for those of you who are in our challenge community, we're going to be doing a review of the prospectus tomorrow, and we've already scheduled that session. If you are interested in joining us to check out that session, you can just sign up with the link in the description or in our profile. But we have a monthly investment program where we do things like stock reviews. So whenever an IPO comes out, we review it inside that community as a way to just get more practice on what we teach. So that's what we'll do here. We will do an overview video of the prospectus here on YouTube for persons who just want to get a high level understanding of the offer. But because we are we're likely going to go in depth, go through the financials, go through the portfolio companies, all of that stuff. It's a little bit too technical for YouTube. So for those who are interested, and again, I'm sure that you'll see either an investor briefing, taking stock interview, things like that you can check out as well. All right, so I'll save this question for Kadeen. So I'll mark that one. Thank you, everyone who has been here. If this is your first time here, because I know a lot of persons would have probably been joining us for the first time, we do content like this all the time. We have a lot of CEO series interviews that you can check out. So you can subscribe to this channel. If you're here and you enjoy this interview, take a moment to like the video. If you're new to investing, check out our Investing for Beginners playlist. Is actually in the format of a course now. That's how YouTube does it. So there's actually a courses tab on our YouTube channel that you can click on, and you can watch that 8-video playlist as a course. We have investing for beginners. We have investing in dividends, setting goals, using JTrader, how to analyze companies in terms of fundamental analysis, how to invest your first 100,000. So we have videos to help you learn and grow as an investor. If you want to take it a step further now and you want to actually learn how to get better at things like research, investing, having a process to invest for yourself, you can join our investment community. We have a general community that everybody and all are welcome to join. We have about 2,300 persons in that community right now. And then we have our paid membership community, where persons who want to go a little bit deeper in terms of investing, you can join that monthly program. That is our ways in which we help you as an investor. So if you're brand new, don't feel intimidated. We're here to help as L.E.A.R.N Grow Invest. And then of course, we do recommend that you take the time to learn, right? Don't just take the advice of others. Don't just read, the sentiment in groups. If there is commentary or broker analysis, etc., take the time to do your own analysis as well, and combine all the information together and make an informed decision, right? You don't want to do an emotional one. You don't want to do something that may jeopardize your personal goals or your investment goals. So that's my takeaway as we prepare to close the stream. So thanks again to everyone, and I'll see you again soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.